everyone. We are group number 10 to introduce our Star Trek investment experience. We have three group members. The first one is Yang Qian. She is our leader. I am Hao Sang, and another group member, Shu Yangxi. First, we understand what is Star Trek. Star Trek is a convenient stock market simulation game for users to practice different types securities, include stocks and international stocks, operations, bonds, futures, mutual fund bonds, and more. Every register will have a virtual 100,000 to help them invest stocks in virtual stock market.
Then we begin to get an investment philosophy. Due to the first time we enter the stock market, we have to do a lot of research before purchasing each stock to make sure we make a right investment decision. We prefer to invest long-term stable stocks. In general, hybrid stocks are riskier but have the potential for higher returns. Low-beta stocks are less risk but also lower returns. We always choose conservative investment philosophy to avoid the risk of loss. After decision, we hope to achieve 3% return before the end of green. In addition, we hope we could get more experience and understand the stock market after this investment game. Yahoo Finance and Budget are good sources for us to get better value, price history, and some news of a company. The information is useful for us to make a better choice. We always ask ourselves some basic questions. Do we understand the company's industry? If not, we will do a lot of research to understand the business and make sure the company's margin of safety.
Here I will talk about three examples we invested in. The first one is IBM. It is the ideal stock for us to invest in because it has a lower beta, which means it has lower risk than the market. IBM has been around for over 100 years and has generated consistent cash flows for its stockholders through the form of dividend. The yield is about 3.8% of the share price, so it can be considered a good income stock. On February 23rd, IBM stock increased about 4% because the stock was going up. We purchased 50 shares of IBM at the price of 131.6 per share. We hold this stock for over 1 month, finally selling it at a price of 144.14. On those two trades, we saw a return of 9.46% and a total gain of 623. Second one is Disney. It is another stock that we really like. It is founded almost 100 years ago. It is one of the biggest producers of mass media in the US and Disney theme park around the world. Once again, we had to use some technical analysis to decide when we should enter the market with Disney. What we did this time was a bit different, using different lengths of moving averages. In this case, we use 50 and 20 days moving average. Watching for 1 week, we could see 50 days moving average was falling fast, while 20 days moving average appeared to be increasing. This means the two averages would soon cross, indicating a clear upward trend in this movement of this stock. On March 2nd, at the open of the market, we bought 100 shares of Disney stock for the price of 70 97.75 per share. Over the next 2 days, the stock trended upwards, and the two moving averages mentioned above continued to approach each other. We then doubled the size of our position. On March 4th, at the open of market, we bought 100 more shares of Disney stock for 99 per share, which left us 200 shares at the average price of 98.38 per share. Several weeks later, the stock price decreased. Unsure of what was going on and why this happened, we decided it was best at this point to minimize our loss. On March 24, we sold all of the shares of Disney for six, sorry, 96.5 per share, taking a total loss of 375. The last one is Chinese electronic retailer Alibaba. Since its start in 1999, Alibaba's earnings keep increasing beyond everyone's expectation. Alibaba has a strong foothold in the market of e-commerce in China. The value they provide to their customers is very high, and with the growth in earnings of many Chinese consumers will likely mean the growth in their sales and eventually their success as a company. On April 22nd, we bought 200 shares of Alibaba at the price of 79.76 per share. We continue to hold this position in Alibaba as more as a long-term investment for future growth. Analysts expect to see the stock reach 92 by the end of this year, but we think it could be as high as 100.
Now our portfolio value is 98,000. That shows that we didn't achieve our goal to get 3% return. But we learn a lot of experience from this investment game. First, emotion discipline. We need to trust the data and information rather than self-judgment. Second, diversify. Buying multiple stocks is better than we put money in one stock. Third, invest in things we know. Pay attention to what's going on with your investment. No stock is safe forever. Finally, take your load quickly. We decided to sell some of the failed stock, which continue to decline, to avoid the great losers.